In my previous lecture video, I had given business finance and types of business finance. This is the continuation of it with banks and types of banks. In that banks, I have mentioned some introduction part. I am not going into deep as everyone is known what is bank, what all it does, where it helps, everything. So I am not going to mention it more. But still, for some information I'm adding over here. That is, banks are financial institutions which essentially deal in money and provide many subsidiary services. As we all know that there are many services provided by banks. Then is banks are those institutions which accept deposits from public for the purpose of lending or investment, and such deposits are repayable on demand. Next is, even though these services are mentioned, according to the Indian Banking Act of 1940, it says that banking includes not only the above activities but also several other activities such as collection of check, drafts, and many other things. It is also referred as subsidiary service. Why subsidiary service? Because some more extra services which are provided by banks are offered or given to the types of banks. I'm mentioning some types over here. There are 9 types mentioned on the screen. Central bank, first one. In this central bank, what is there? That every country has a central bank. In India, there is RBI. Likewise, in America, there is Federal Bank. In England, there is Bank of England. So these banks act as an apex for the financial institution. Okay, so RBI was established in 1935, but the act which was RBI has used is the Act of RBI 1934. So what RBI helps is, or what the central bank helps is, it is not only dealing with public but it deals with other banks also, and it helps in issuing paper currency, acting as banker to the government and other banks and controller of credit. Next is commercial bank. Commercial banks are established with the object to help the businessmen, the development of trade and commerce in the industry, and to develop the businessmen in today's world. Then is, in 1969, I would like to mention this, many commercial banks got converted or were converted into nationalized banks. Some of them are SBI, Bank of Baroda, HDFC Bank, Axis Bank, Canara Bank, Dena Bank, many more. So, in this commercial banks, the main functions are accepting deposits from the public and giving loan to businessmen. So, the commercial banks are helping whom? To the businessmen. Central banks are helping whom? To the commercial banks. And third point is development banks. Development banks are also known as industrial banks. Why? The word itself says that they are focusing on industries more. So whatever is loan provided or any facilities provided, they are going to provide to whom? To the development banks, right? Or to the industries, right? So they are providing technical and managerial guidance in managing industries. They also nominate directors. Why they nominate directors of some companies? So that the funds which they lend are utilized properly. Then is cooperative banks. Cooperative banks are registered under Cooperative Societies Act 1912. So they generally get facilities to farmers, salaried employees, small income group or small scale industries. So cooperative banks are available in rural as well as urban areas. There are 3 types mainly: private cooperative, also can be said credit societies, then is state cooperative and the central cooperative. Fifth point is specialized bank. Specialized banks are those banks which are focusing or mostly specific areas are looked after by these banks. For example, EXIM, that is export import, then is the SDBI, then is NABARD. So these specific areas are looked after the specialized banks. They only focus on the specific areas mentioned and they help over there, like the benefit for farmers, laborers, salaried employees, etc. Then is regional banks. Regional banks are those banks which are mostly carried out in rural areas in countries as well as in regional areas. So in this, the main objective is to promote banking activities in remote parts. Remote parts is a small parts where there is no more facilities or no more benefits are taken. So these banks help for those people who are not taking their benefit, and to take the benefit, they are mostly helpful to the farmers, laborers, salaried employees. Also, they are known as agricultural banks. So whatever agricultural things or agricultural field is there is looked after by the regional banks. Okay. Then is Exchange Bank, Hong Kong Bank, Bank of Tokyo, Bank of America are examples of banks which are running in India or working in India. But these banks are mainly concerned with financing trade functions, retaining money from one country to another, and discounting of foreign bills, buying and selling of gold and silver, export import, all such things are looked after exchange banks. That means exchange bank is mostly focusing on the things which are for the place where exchange of things can be done. Then is indigenous bankers. In this bankers, the banks are not there, but the person or the people who are providing money to small group or small people or any other individuals or small traders, why they provide, as if they are having a high rate of interest, but there is a less procedure than other banks. So indigenous bankers provide money to them all. They all are known as money lenders, or also can be said as saukars. But even though at a high rate of interest, people borrow money from them because for the least formalities to be carried out. And the last is saving bank. In saving banks, the most thing, this bank was established due to generating the habit of savings in people. Like there are people of low income group, salary group, so they don't cannot invest more and more money, or they cannot use such other banks. So saving banks are helping them to make their money generated more and more by having savings. In India, post office saving banks is one of the most popular and most majority of the people using this kind of bank, that is the post office saving bank. So in this types of banks, I have mentioned 9 types. If you find more, you can add it, but in today's video this will be the end part. In the next video there will be any continuation, but for now I am starting with secretarial practice. In that topic I am covering is sources of finance. Okay. Secretarial practice, in this subject I am going to cover with sources of business finance. So in this I am going to cover introduction, nature, sources and types of capital. Everyone is known to finance, but still an overview that what finance is for business. So business is the study of money, which is included in every business activity. What money is and what money does is the basis of knowledge. So it can also be said as the supreme controlling factor. In Sanskrit it is said as Artha Sachiva. That means without finance, business is nothing, or the business is like how a human being is no body without blood. In the same way, finance is nothing without business. If business is there, finance is there. If finance is there, business should be working. In nature, I am mentioning 7 points. That is provision of money. Provision of money is what that I can have provision of money for carrying out business activities. Various business activities can be carried out due to it, and also like purchasing, marketing, production. All these activities will be carried out when I am having that provision made. That is key to business activity. Key to business activity can be when the finance is available with me, I can help it as an effective business, or without finance I cannot run the business. So key role is been played by finance. Then is payment of obligations. No obligations can be there if payment is made on time, if finance is there on time, so no obligations. Then is parameter of profitability. I can measure my profit when and when, because profitability is the major part of running a business. If profit is not there, then parameter is also no use. Then is circulatory system. It is a cycle that from where I am taking and from where I am giving. That is, there are some receipts, there are some payments. So sometime I am taking, sometime I am giving. So I am a giver, I am a receiver. So in that type it is a cycle, and then it is regenerated again and again. Then it's inseparable from business. Like I have earlierly mentioned that a human being is not having a body without blood. In the same way, business is not there if finance is not there. So if they are separated, the business cannot run alone without finance, and if finance is there, business should be there. Okay, then is money management. I can count, or I can say that the outflow and inflow can be managed by me due to money management concept. So all these natures are categorized into finance. Then is sources of finance. One is external sources, the other is internal sources. In external sources, I can issue shares, I can issue debentures, loans from institutions can be taken for me at a long period of time so that they can give me facility of loans. Then is public deposit, whatever public is depositing into it, I can have it. Then is bank credit, bank is providing me some facility, and that facility is being taken by me or benefited by me, because for a long period of time, if I am requiring some money, these external sources will help me more rather than internal sources. Then in internal sources, what can be said is internally, that is within the business itself, I am having some profit, that is retaining of profit. I kept my profit with me sometime, and that profit is been used for me, that is plugging of profit. From here I am taking it out, I am investing in some other way or some other direction. Then is issue of bonus shares. I can issue some bonus shares internally in the business to have source created for finance. So external and internal factors are what, that it helps to generate profit or helps to generate the finance earlier. In internal sources not available, I can easily opt for the external sources because I am having 5 various things to create finance, that is the sources available for me. So in this internal and external sources, all these parts are covered. Then is types of capital. In types of capital, I have mentioned two types, that is long-term capital and short-term capital. The various things mentioned on the screen are owned capital and debt capital. That is, owned capital is which I am owning it itself, that is shares and retained profits. Shares everyone is known to, but retained profits are those profits which is the profit which I am keeping with me when paying all the expenditures or payments are made, and whatever surplus is remaining with me, that is retained profit. In shares, again there are two parts, that is equity shares and preference shares. Equity shares are ordinary shares which carry voting rights with them. Okay, but in preference shares, they are entitled as the holder and they have a fixed dividend for them. Also, they are having rights before the ordinary shareholders, that is before the equity shareholders. Preference shares are preferred first. Then is debt capital. Debt capital is from where I am taking loans, and after a long period of time or some period of time, there is not more than 1 year is long term. So after that, if I am paying it, then it can be calculated as long term capital. If it is within 1 year or 6 months, then it can be calculated as short term capital. So from loans, if I am taking from banks, bank is granting me loan, and that loan is used for me in making my capital more and more. Loans from institution is granted to me, the institutions are providing me loan for a long period of time, so my capital is increased. Yeah, it can be a liability for me, but for future I can have it paid or repaid it back to them. Then is short term capital. In short term capital, public deposits are there which public is depositing with me. Then loan from directors, that is directors of the business are granting me some loans for the effective business running. Then is trade credit. Trade credit is where I am having, like if I give you an example, I can say that it can be a instrument for buying and purchasing and selling on credit basis mainly. Then is bank credit. Bank is providing me loan again, that is, as I'm a businessman, I have the facility of current accounts, and the current accounts help me in bank credit. Overdraft facilities provided for me. So all credit facilities which is provided by bank is for business, and that can increase my capital, so that can be short term capital. Then is advances from customers. Whatever advances are given by the customers, I can use it, and then that customers, when they are repayable on demand, I can repay them back. And government assistance, this is the very easy point, that is some subsidies of government are given, and the business is benefited by it, and therefore government also helps in some kind of business. If a business is a public and private, whatever semi private, then it can be have some government assistance facilities provided by the government, and this can be helpful in my capital formation. For a short term capital, I can have this kind of facility. So all this is covered under types of capital. Thank you.